this is John Piper with the weekend video clip, and it's Saturday the 13th of May. I thought I'd give you an extract from my speech the other day at the Round the Clock Trader seminar in London. I'll also be looking at this in the Krautgap A-B conference at the end of this month. So the first chart we have here is of the, well, let's just look at the chart. Basically we have this market going straight down, and we're looking here at the silver content of the Roman Denarius. Now that may seem dim and distant past, but it has relevance to today. You'll see that the Roman government managed to debase its currency by over 90%. And in those days, what they had to do was actually remove the silver content from the coin, so it became less and less valuable. Our politicians these days have many and more varied ways of doing this, but basically the effect is the same. And of course the result was that ultimately the Roman Empire collapsed. Now, right, the next chart is the value of the pound, 1750-2002. Of course the empire is long gone, as it were, but we see again that the value of the pound was over 1,000 on this chart back in 1750. It's now just about 10 in the year 2002, and of course that depreciation has continued. So we have the same basic principle, politicians organising the issues so that the value of the currency is just debased again and again and again. I'm not sure they have any choice actually. I'm not sure the politicians are actually to blame in the sense that they're sort of mindless tools, and the whole government process, the whole human experience sort of leads things to work in this way. That's a sort of theory that I formulate, but it's quite a common trend that we like to spend money, we like to have more and more of things. I think that's a sort of human emotion, and our politicians will tend to give us what we want to stay in power. Therefore, this is the effect that happens. But the key thing is, as John Maynard Keynes said, that Lenin was said to have declared that the best way to destroy a capitalistic system was to debauch the currency. And Lenin was certainly right. There is no subtler, no surer means of overturning the existing base of society than to debauch the currency. The process engages all the hidden forces of economic law on the side of destruction, and does it in a manner which not one man in a million can diagnose. In a way that confirms what I was just saying about it's something we can't really help happening. It's a sort of natural evolution process, and whereas it can be viewed as an actual attempt to destroy the capitalist system, I think it's more that that's just the way things happen to work, rather sadly. Now the reason I'm mentioning this is because this effect or this result of our currencies being debased is really why Bitcoin, etc. are doing so well. Because would you rather have your cash in something like the Roman denarius, which is dwindling away rapidly, or the pound dwindling away rapidly, or the dollar? Would you rather have it in Bitcoin, which it actually avoids the government influence and is rocketing ahead skywards for this reason? Because that won't always be the case. And I'm not saying that Bitcoin is going to be something that's going to continue to rocket to the skies ad infinitum. That's bound not to happen, I think. But right now, I think as people realise, or all people see what's happening, see these things becoming more and more valuable, clearly there's a massive attraction there. But my experience is that very few people are actually in there yet. So it's something that, certainly whenever I do a survey, people who have any Bitcoin or etc. is very small. I very rarely meet anybody among my associates, colleagues, etc. who hold any kind of cryptocurrency. So there's a vast number of people still to get on board. All right, let's switch to a chart of the Nasdaq Composite, just for comparison's sake. We saw this big rally into the start of the new millennium, major peak, collapsed down, then a rather feeble rally, another collapsed down in 2007, 2008 we saw this low. In real terms that would have been a new low because of the inflationary aspect. And again, if you've got your currency being debased, you don't want to be in currency, you want to be in something else like stocks. And we're seeing this massive rally, 1, 2, 3, 4, and now in the fifth part of that rally. Now, this part here from around 1200 to 28 was about 120 odd %. This one came in from about 2.3 up to 5.2. So again, another solid 100%. This one is currently lagging now at about 4.3 up to 6. So I know you can't see the pricing here. It's difficult to get this in on the chart, but now it's about 6,000. So about 50% so far. This is not a log scale, this is an actual scale. So it's hard to say this is actually over, but it does look like we're into an acceleration phase. It could be a blow off top, etc., etc. Need to see some evidence of a peak, which we haven't seen yet. Certainly not on this market anyway. But again, we have this solid 5-wave advance now. It's just a question of time before this peaks. And what comes next remains to be seen. After the whole QE experience has been pumping cash into the economy, this accounts for this to an extent, a very, very solid rally in this market. Right, switching to the Dow, we have since 2009 low. We have a 1, 2, 3. I count that as an ABC. A, B, C, 4. This looks like a 1, 2, 1, 2, 3. So if so, the acceleration phase is behind us, but we still have a bit of toing and froing to actually complete this pattern. Still go quite a bit higher, but we are at the phase where we could start to look for peaks. Certainly the Dow has been failing recently, hasn't been achieving very much. Really, I need to see something that's definitive. I need some good sell signal, really. At the moment, we haven't actually seen that. We keep seeing markets probe lower, but buyers come in. So there's no sign of a peak at this point in time. It's going to look at the shorter term yet. So on the hourly chart, we've got this move here, which could perhaps be a wave 1. Then we've got an A, B, C. We'd expect to have some buying come in, but again, this is not terribly exciting. So we could be seeing some kind of failure here. We're obviously near a peak. But as I say, we haven't seen enough yet. We've got a couple of spikes, but the actual selling has been fairly muted. Well, looking at FTSE, we saw a low here, corresponding with the lows we've just been looking at. This is a daily chart. 1, 2, 3, 4, then 1, 2, 3, 4. So we now have a fifth of a fifth here. This could be the final move up on FTSE, so obviously watch that quite carefully. We're looking for a fourth wave and a fifth wave. Let's go down a leg and look at that. Right, this is the hourly charts. The low came in here. 1, 2, third wave in process. But once those 4s and 5s are out of the way, which could easily happen next month, or I suppose possibly this month, but we start on the 20th of May, so I would expect this to drag on into June, although we do have expiry next week. Right, next is another interesting chart. I count this as a 1, 2, 3, 4, and a 5. That was the orthodox peak there. A, B, C, A, B, and a C coming in here. Again, maybe a bit of toing and throwing. Again, it's made new highs, but in real terms it hasn't, because of this inflation, etc., debasement of currency, etc., etc. So it seems to me that we're due major peaks in all these equity markets. FTSE looks like it could happen sooner than later. The other ones could go on a bit longer, but I think something fairly dramatic is ahead, but we're not there yet. Right, finally look at gold. Charlie Gold itself is not that exciting. I mean, we've got support at 12.20, and this rally is promising. Actually, quite a good rally on GDX, which has moved up about 8% in the last few days. The gold miners often lead these markets. So I'm actually more impressed with what GDX is doing, what gold's doing. But I think this, of course, is long enough already. Obviously, all these markets benefit from this debasement of the currency in one way or another. And I think this is a major factor governing the market, and of course QE pouring cash into the system, etc., etc. Anyway, my conclusion from the charts is that the equities past their best are due for a major correction. Gold and silver still look very good once these corrections are over, and they're my preferred investment medium right now. Bitcoin, all the other various cryptocurrencies, again, because it's hard to value, it's hard to give Bitcoin a value, there really is no basis of doing that. I continue with my sort of have a small percentage of my wealth in the cryptos. It's proving a very interesting experience. I think it's a good thing for anybody who has an investment portfolio to have an exposure on cryptos. But they're going to have setbacks, and they even disappoint completely. I don't know, but certainly right now they're going extremely well and outbeating everything else in sight. And so certainly there's a lot more people who still need to get involved, or will get involved, to drive that continuing move up. And as I said, gold and silver seem to me to be my preferred market of choice right now. Anyway, on that note, I'll call it a day. I hope you found it interesting and useful. Back to the report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.